You're scrolling through Immo Scout and there it is, the dream house. Perfect garden, quiet street. And you already see yourself having Sunday coffee there. Maybe hosting friends for a barbecue. And then you see the price tag, 400,000 euros. Your heart skips a beat because now the big question hits. How on earth do I even start financing something like this in Germany? If that sounds familiar, you're not alone. Real estate financing in Germany is full of German words, complex rules, and numbers that somehow grow every time you look at them. But by the end of this video, you will understand exactly how real estate financing in Germany works, what banks expect, how much equity you really need, how to compare loan offers properly, and how to avoid the biggest money traps along the way. By the way, if you're new to the channel, my name is Essen, and on this channel we discuss how to build wealth in Germany. Let's start by understanding what real estate financing really means. When people talk about Baufinanzierung, they're talking about a special long-term loan for buying or building a property. You repay this loan every month in two parts. One part is interest, which goes to the bank. The other part is repayment, which reduces your debt. That's why this is not a short race, it is a marathon. These loans usually run for 20 to 25 and sometimes even 30 years. During that time, you lock in an interest rate for a certain period, typically between 5 and 20 years. This period is called your Zinsbindung or fixed interest rate period. Once it ends, you'll need to arrange a follow-up financing, meaning you'll renegotiate the interest rate and conditions for the remaining loan. So why does this period matter? Well, because your fixed rate period gives you security. You'll know exactly what your monthly payments are with no surprises. But the longer that fixed period, the higher the rate usually is. So it is a balance. More security costs a bit more. It's similar to locking in your rent price. Short term might save you now, long term gives you peace of mind. What determines your monthly payment? Your monthly payment isn't random. It depends on a few key factors. Number one, your equity or how much money you bring in yourself. Number two, the loan amount or how much you borrow. Number three, the interest rate or the cost of borrowing. And number four, your repayment schedule or how fast you pay it back. In other words, the more equity you bring, the smaller your loan and the lower your monthly payments. Here's an example. Let's say your future home costs 400,000 euros. If you have saved 80,000 euros, that's 20%. The bank will likely give you a lower interest rate because you're sharing the risk. If you've only saved 40,000 euros, that's okay too, but your monthly payments may be higher because here the bank takes on more risk and you'll pay for that in interest. So yes, your equity doesn't just buy bricks and walls, it buys trust, and trust from the bank may be worth real money. Now, how does this whole financing process actually work? There are 5 big steps. Clarify your budget. Figure out how much you can afford each month comfortably. Compare offers. Don't just go to your usual bank. Check multiple lenders or brokers. Submit your application. That means proof of salary, equity, and sometimes even your job contract. Sign the loan agreement. Once approved, read it carefully before committing. Receive the funds, often in parts, especially if you're building. Payments follow construction process. So here's the big question every buyer asks. How much equity do I actually need? Most banks recommend you bring at least 20% of the purchase price as your own contribution. So if your dream house costs 400,000 euros, you should ideally have 80,000 euros in equity. But there is more. On top of the purchase price, you'll have additional costs like taxes, notary fees, and maybe even agent fees. Those can add another 10% of the purchase price, around 40,000 euros in this case. So ideally, you'd have around 120,000 euros saved in total. That sounds like a lot, and it is. But remember, the more equity you bring, the less you'll likely pay in interest and the faster you'll be debt-free. If you have a stable income, some banks might accept less equity, maybe 10% or even 0% in special cases. But they may charge a bit more for the extra risk. And make sure you always keep a small emergency fund aside, because even your dream home might need a new roof or a boiler someday. So what counts as equity? Equity doesn't have to mean just cash sitting in a savings account. It can also include savings or checking account balance, stocks, ETFs or investment funds, life insurance policies, and some other insurance plans. Basically anything that can be quickly turned into money for your home purchase. Just make sure you don't invest everything. Keep a bit of liquidity for emergencies or moving costs. Because no one wants to be house rich and cash poor. The hidden costs of real estate in Germany. This is where many people get caught off guard. That 400,000 euro dream house is really just 400,000 euros. You'll need to budget an extra cost that can reach up to 12% of the purchase price. Property transfer tax between 3.5 and 6.5% depending on your federal state, notary and land registry fee around 2%, real estate agent fee about 3.5%. So let's do the math. For a 400,000 euro home, that's 14 to 26,000 euros in taxes, 8,000 in notary and land registry fee, 14,000 in agent commission, so that's between 21 and 48,000 euros on top of the house price. So the true cost of that 400,000 euros would be closer to 450,000 euros. And that's before the furniture and small renovations. That's why it's always recommended to include these costs from the start. Otherwise, you risk borrowing too little or dipping into savings you can't afford to touch. So how to compare financing offers properly? Here's something most people overlook. Not all low interest offers are actually cheap. When comparing mortgages, focus on the effective annual interest rate, including all fees, the repayment rate, special repayment options, so you can pay extra when you have spare cash, and the total cost over the fixed rate period. Here is a real example. For a 300,000 euros loan over 20 years, the difference between 3.56% and 3.76% interest rate equals about 15,000 euros in remaining debt. That's 15,000 euros just for choosing the better offer. So small numbers can make huge differences. You can head on to the first link in the description or this QR code to start comparing. Couple of things you might also want to know, as there are so many myths floating around about real estate financing in Germany. Like a high income can replace equity. Not really. A high income helps, but banks still want security for first-time buyers. So aim for at least 20% equity. My bank knows me. They'll offer me the best rate. That's what they want you to think. In reality, it's always best to compare your options. Special repayments don't make a difference. Actually, they make a huge difference. Even small extra payments can save you years of debt. Interest rates hardly change. They do. And even tiny changes add up. A 0.3% difference over 20 years is thousands of euros saved. Longer fixed interest rate is always better. Not necessarily. It gives security, yes, but it can cost more. So balance stability with flexibility. You can always get a mortgage if you don't have a German PR. Yes and no. If you have a really high income, you could get a mortgage without a PR, but your terms would not be as good as someone with a PR. And as I said earlier, even a small difference in interest rate can make a huge difference in the long run. That's why financing your dream home in Germany isn't about luck. It's about preparation and planning. So bring in as much equity as you can. Understand all the hidden costs and don't rush to sign the first offer just because it sounds good. Because when you finally hold those house keys in your hand, you'll know you didn't just buy a property. You built your future one smart decision at a time. Now that you have basic understanding of how real estate financing works in Germany, the next step is to figure out how much house you can actually afford in Germany, which I shared in this video.